And welcome to today's morning report on Tuesday the 13th of September with me, Richard Perry, market analyst at Handtech Markets. The European session has got off to basically a neutral start, mildly positive on the DAX and the CAC, just slightly lower on the FTSE. There has been a turnaround in sentiment once again. Overnight we had that speech from Brainard, the final Fed member that was going to speak before the close period that the Fed goes into, or the FOMC goes into, prior to the FOMC meeting that comes next Wednesday. And Brainard is a historic dove, and she came out with no change to that rhetoric either. Generally speaking, she sort of believes that hiking interest rates too soon or preemptively could lead to damage to the economy. So subsequently the market took this as a bit of a signal, because basically the Fed members recently have been coming out fairly hawkishly, but it's interesting that Brainard is still very dovish, and it sort of suggests that we're still going to be seeing a no rate hike in September. The Fed expectations, or FOMC Fed funds futures expectations, have dropped again back to 15% on FedWatch, CME Group FedWatch, and it's interesting that this has been seen. We've seen if I show you the Treasury yields, again slightly lower on the 2-year and the 10-year. It's interesting that this is the spread between the 2s and the 10s. You've had quite a significant move to the upside in the last few days, actually, and that's come as sort of markets sort of looking towards possibility of central banks looking towards trying to steepen the rate curves, and the Treasury yields have sort of taken that on board in the last few days. But what the impact of Brainard has been on the dollar was a slightly corrective move, although that has again unwound a bit today. Dollar strengthening a little bit as that sort of Brainard-inspired losses have just unwound slightly. Interesting move coming also on oil. Oil back down again. The choppy moves on oil continue since we had that rally towards sort of 48.75. We've seen really choppy moves and a lot of volatility, and I think that this is going to continue throughout September until this meeting in Algeria. And we've had out this morning news from the IEA, which suggests that surpluses or oil production surpluses and surpluses in the market are still an issue going forward into 2017. So that could well have an impact lower on the price today, and already what we're seeing is the oil price falling away. So this is some interesting moves in these markets, very choppy, and I think the chop is going to likely to continue in front of the Fed. You've got a bit of data for the US at the back end of this week, but in front of the Fed I expect the markets just to be choppy and little real direction, unless you get a massive sort of surprise on inflation or retail sales on Friday. So, what have we got to look forward to today? Well, we have, if I can show you the calendar, again, that's not what we're looking for. Here we go, the calendar. We've had Chinese data out overnight, not really done too much to drive positive sentiment, even though we had a beat across the board on retail sales, beating at 10.6%, on industrial output, 6.3%, and also fixed asset investment as well. 8.1%, so strong data, or positive data I should say, across the board there, but not really impacting on markets. So we look out for today. We've got the UK inflation data at 9:30, so that's very soon. 0.7% on the headline, and 1.4% on the core data, and that would be a continued improvement. It's interesting that since Brexit we've started to see a bit of traction in inflation, and that would be natural considering how much sterling has dropped on the Brexit decision. Core data back up to 1.4, so not too much traction, but certainly on the headline there seems to be a bit of traction finally, and I'd imagine that is likely to continue. And at 10 o'clock we've got the German ZEW economic sentiment, 2.5, up from 0.5 last month. It seems to be around the flat line though, so it's around neutral, so it's not really a significant steer getting from that survey, although there is a direct link between the economic the ZEW and also the EFO by the way, but also but mainly the ZEW and also growth. So positive correlation between those two. So slight improvement there would be slightly deemed to be positive for economic growth in Germany. So let's head to my chart today, which is the Aussie dollar. And we've had this corrective move on the Aussie dollar in the last few days. Look at that strong downside move, but we bounced off that support that came into place yesterday, 74.90 area. 74.91 was the low yesterday before the bounce, but we've seen a continuation of the move lower. So that dollar is that rebound was on Brainard yesterday into the close, but the Aussie dollar coming back under pressure, and the Aussie dollar is actually the biggest underperformer of all the forex majors today. So it's still under pressure. The momentum indicators falling back lower again. The RSI back below 40. Back below 50. If the RSI goes below 40, I would say that is getting to be a bit of a concern. Also, the stochastics falling away, and also the MACD lines didn't really react with that rally, did they? MACD lines, the early rally in September. Or rally in early September, I should say, not really reacting positively, and certainly the MACD lines seeming to be on the brink of turning negative. So some pressure to the downside could well be growing. Now, this is the hourly chart where you can see this move. The support, sorry, I should get rid of that. That's not really relevant anymore. The support, as I said, comes in at that 74.90 area. Key reaction low. So coming back to test that, but look at these MACD lines on the hourly. Unwound to neutral and selling off. Stochastics negative. RSI unwinding to 60 and selling off, looking to go back towards or below 30. So this is all sort of a turnaround in sentiment. Now, in terms of your overhead resistance, you're looking at sort of 75.60, which is a sort of a slight near-term pivot. 75.65 was yesterday's high. Up towards 75.80 again, which I sort of zoom out, I'll show you that is a pivot line, 75.80. So again, you've got sort of, that's your key resistance near term now, so 75.60 to 75.80. So any rallies towards that level should be seen as a chance to sell, but at the moment it certainly looks as though the momentum is building for a downside break, and below 74.90 you're looking at 74.17, which is this reaction low here from the 27th of July. But 74 figure as well seems to be a sort of a fairly important long-term level. 74 figure could well be where we just drop back to on the Aussie. So some interesting moves on the Aussie certainly, and it looks like it's on the brink of breaking lower. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.